So hello everybody and welcome again to today's webinar, which asks the question, is this the perfect storm for property investors? I'm Terry Ryder, founder of Hotspotting, and today I'm speaking to Danny Buxton of 000 Property Group about how to succeed in a raging property market, because right now we have very unusual circumstances in property markets right across Australia. In many parts of the nation there is frenzied activity. Properties are selling very quickly, often for more than the asking price. And there are reports constantly of people buying sight unseen, just looking at property details online and making a phone call to buy something they haven't seen or had looked over by a representative such as a buyer's agent. So we have very elevated sales activity in most parts of Australia, and prices are rising, you could say, almost daily. And it represents a great opportunity for property investors, but it also presents some difficult situations. How do you compete in such an environment, and how do you buy safely and sensibly amid such a frenzy? Today, our guest speaker, Danny Buxton, and I are going to examine all these issues and do our best to provide you with some answers. We'd like your involvement, so please give us your questions by typing them into the chat box or the Q&A panel, which you should see in front of you. Please keep your questions short and succinct, and make sure that what you type in the panels is actually understandable. So, Danny Buxton from 000 Property, welcome.
Thank you, Terry, and thank you for the opportunity to have a conversation with you. And I'd hope that our webinar is a conversation, both obviously us talking about what's happening in the market and why, and just talking about some of the areas that we're seeing some good opportunities for those who are looking to invest, but also to answering some questions from our viewers, and thank you to the viewers who are tuning in and who'll be watching this at a later stage.
Yeah. So the title, the theme for the webinar talks about a perfect storm for investors. What do we actually mean by a perfect storm?
Well, it is an interesting one. We've certainly seen a lot of media hype going on, and but there's obviously a lot of fundamentals that are in the marketplace that we're seeing that it's obviously seen this significant growth surge that we're seeing occurring not just in Queensland, where we're based, or in southeast Queensland, but Australia-wide. It's quite unique, and it's something that hasn't happened for a long time. And I think coming out of COVID has probably, again, if you use that analogy with stepping on the hose, has probably seen that happen. There's certainly a lot of FOMO, fear of missing out, that's going on, which is seeing that happen. But also too, I guess, particularly in those regional markets and in those smaller capital cities, there's a greater demand. And we're seeing that population growth, demand for property, limited supply of land, which is adding to that panic buying, certainly locally here on the Sunshine Coast. People sleeping out at land releases in two of the major developers, and again restricting. It's very interesting. They're restricting a lot of that those sales to owner occupiers only, which is then adding to that further pent up demand from a rental perspective. Because as we've had 2 or 3 years of tight fiscal management pre-COVID, where the banks haven't been lending, or haven't been lending, but been very restrictive on their lending with APRA and some of the policies in place. Then we had COVID, where there's a lot of fear in the marketplace, a lot of people just pausing and waiting and seeing, and then obviously now coming out of COVID, I think people have in a lot healthier position financially than what they expected with saving, and obviously the sky didn't fall in, and so then there's been that big demand that we're seeing there. But I guess there's also those fundamentals with infrastructure spending in a lot of these areas that we're looking at, and it's not just a short term. We're not just here, and we should never be looking when we're investing. You should never. It's not. There's a difference with investing and speculating. Speculating is you hope it goes up, you get in, get out, and hopefully and it's a much harder thing to do, and it's something that we're not interested in doing. It's investing is for the long term, and we want to talk about future-proofing that investment in this market that we're doing. But there's the old saying, time in the market and timing the market. And investment is a long-term thing, but the timing is just fantastic with where we're going through that property growth surge. Call it property boom. I'm always hesitant to use that word because there can be a lot of negativity about that. But it's a very exciting time. We're I believe and we've talked about this before, Terry, a once in a generational property cycle, particularly in southeast Queensland, and there are parts of regional Victoria, South Australia, WA, where we see there's good long-term opportunity over the next 2, 3, 4 years to be really smart.
A perfect storm is really it's an alignment of a whole series of factors and influences that have come together at pretty much the one time to create an upcycle on property where we're going to see a sustainable long-term, for want of a better word, boom. And it seems to be active across most parts of Australia.
That's correct. And I might just jump onto some slides, if that's right, Terry, and just share my screen. So just bear with me as we do that. And share screen. There we go. And if you can see that there. So obviously today, as we've talked about, how to succeed in this raging property market. And I guess before we go any further though, Terry, is I'm already starting to see some media reports and some conversations about the lack of sustainability in this, and it's going to crash, and we're going to see a short-term uplift, and then it's all going to just collapse with the end of JobKeeper. And I've even heard that 30-40% drop in property values being sprouted around. And it reminds me back in 2001 when my wife and I, we sat down with our accountant and we're just looking at some things, and we'd been building our portfolio, and he recommended that we actually sell some of our properties and that we should get out of the property market.
2001, he was suggesting you get out of property in 2001, just before the last national property boom started.
Well, because we'd had some uplift in that, 98, 99, 2000, things started to happen in Brisbane, and we had a number of properties there. And again, I've had some clients who we've been talking with, and even probably 8, 9 months ago, had offloaded properties because, or had said, no, we're not going to buy. Our advisors have told us not to buy property; it's going to collapse. And now they're coming back saying, how do we get back in? And again, it's knowing the market, having the right people around you, and ensuring that you get it right. And I think it's just important to again build that team.
It's really important to listen to the right people, isn't it? Far too many people listen to people who aren't specialists in real estate and really are giving bad advice from a distance.
Yeah, and so on the screen there, look, just the fine print stuff in anything that we do and we talk with clients. Before you make any decision, talk to your professional in the area that you're getting that advice. Understand that obviously today what we're talking about is is general information, but obviously have a read through that. The examples that we're talking about are genuine examples and real examples, but obviously your situation is different from others around you. So to me, I think the key in getting things right though is, and I use this slide change a little bit from our last webinar that we did, Terry, back in August. You've got to get your ducks in a row, and you've got to make sure that I'm going to go to that bottom point there, is build your team. And having the right team of professionals around you is essential. Have a really good financier who understands your position and understands what you're trying to do. You've got to start with the end in mind. What is the purpose of your investment? And once you know what that is, and then we know where you sit financially, we can then map out a strategy that's right for you to achieve the goals that you're wanting to achieve. Have a really good property focused solicitor who knows, again, understands what you're trying to do and can give you the right advice on your contracts before you're signing. Obviously, having a good property broker strategist buyer's agent who can work with you to find the right properties based on your objectives and what you're trying to achieve. That is independent and has your interests at heart the whole way through. Get yourself market ready. A lot of people are talking to us and they're wanting to do something, but they haven't got their finance sorted out yet. They haven't got all those things in play. We've just recently put an option together for a client in Ballina where they're going to make $150,000 to $200,000 just through the purchase of that property. Fortunately, we had a very good vendor who's been working with us, and as we need a little bit extra time before contracts because the entity wasn't correctly sorted out with his accountant. So we want to make sure those things are in play correctly. I think the biggest thing though is don't panic. Yep. Sorry, Terry.
In a market like this, it's really important for people to have everything prepared so that they can move quickly. It is important to be able to move with some speed in the current market, which is very competitive, and to be able to do that while still maintaining the ability to buy safely and sensibly. You have to have all these things in place before you start looking at property.
100%. And what we're actually getting our clients to position our clients so they are market ready. We've got everything ready to go. So when the right option ticks a box, meets all that criteria, we're able to jump on it immediately. We've I recently looked at a package and that we're able to pull together through our acquisition team. I was in the car at the time. I finally got into my client. 15, 20 minutes later, went back, said, yep, let's grab it. And it had already sold. And it actually had 8 offers in that 15 minutes that property became available. And it was a great buy. And we just missed out.
Stories like that are almost the norm at the moment in real estate.
Absolutely.
Yeah.
But don't panic. That's really important because there is a bit of FOMO going on. People just buying something because they just don't want to miss out. When we were talking last week and the week before, most people can make money in a market that's going up, but it's making sure you're buying the right property in the right area, that you're future-proofing your investment, not just for now, but also in the future. And it's about outperforming the market. It's getting those results that are going to give you a good, strong tenant, that you're not going to have issues throughout the process, not just for now, but in the future as well. And so, we have a client we've been working with out of Sydney. And it was funny every evening, and we've joked about it since. Be sending me emails. What about this? What about this? And we'd say, mate, don't panic. It's all good. The right one will come up. We know we're comfortable and confident that it'll happen. And sure enough, everything that we said fell into play. And we just got contracts through today, which his solicitor's now previewing, and he'll be signing off on that, which is a great result for him. In a great place just near us, Terry, up in Yandina. It's a place actually for him to live in, and he's very excited about that area and what's happening, and we see a good opportunity in that Sunshine Coast hinterland. Okay. It's not really hinterland anymore. So, but the important is to build your team and make sure you get it right. We do say be careful though where you get your advice from, which is what we just talked about. Again, FOMO, don't panic. I'm going to keep repeating it. If you're building, know your builder. Make sure you do your due diligence. So I was looking at a builder the other day that someone was promoting options with. You go back, you check the history. They'd only built one house 3 years ago, 3 houses 2 years ago, and 18 houses this financial year. To me, that raises a red flag. And I want a builder who's not practicing on my builds or my clients' builds. I want a builder who's cash strong, who's got longevity in the market, who's been around for a long time, and is not just the cheapest builder, but a builder who is going to be there for you, not just now, but over in the future as well. Ensuring that you're getting a fixed price guarantee, and be wary of misleading quotes where a lot of builders are promoting fixed price contracts, turnkey, but they're missing things. And interesting enough, the difference between turkey and turnkey is that one letter N. And I think a lot of people are buying turkey packages, not turnkey packages, and they're finding that they're what they think they're getting and what they are getting are two very different things. And again, going back to that, knowing your financial position and getting that right legal advice. But enough of that. Probably the most important thing in getting it right in this storm and in this how to succeed in a raging market is your research. And Terry, this is not necessarily a plug for you, but it is a plug. You know, we rely a lot on your reports and have done for many years. But do your research. Don't. A lot of people, when we're talking to them, they said, "Yeah, we've been doing their research," and as we delve into that, it's realestate.com or Domain. You know, looking at realestate.com or Domain is not doing your research. You got to look at the key indicators from where the demographics of what's going on in an area, the population growth, infrastructure, both public and private. Looking at the affordability, the big picture, the little picture, the macro, micro, and we really think accessing those location reports are essential. And it's ensuring that you do buy with your head and not your heart. So many people don't. Again, we've talked about this numerous times, Terry, both on a webinar and also offline. Property, you've got to treat it as a business. It's a business, and you treat it as a business. It's all about the numbers and it's about the money.
Yeah.
And don't panic. FOMO. Saying it again. So I just want to talk about a couple of cases about what's going on in the market and some things that we've seen happen. This is an example. If you look at our webinar we did 6 months ago, I actually used this same house as an example. It was a total purchase of $524,000 on the Sunshine Coast. We handed over this property in September last year. It was actually purchased by a property valuer. It was a great buy for a client where we were able to pull just everything together. We had a rental expectation around about $515, $525. We ended up renting for $575. It was rented 3 or 4 weeks before the house was even completed with multiple applications. So got a gross rental yield of 5.7%. Right now, that property has been valued at $620,000. That's a $96,000 uplift in 6 months. That's $3,500 a month increase in value in that 6 months. Again, it's about being in the right area, in a great location, in that development, and we see no signs of value slowing up. It's really hard at the moment for us with clients who want to. We are picking up options and we'll continue to do so for those who still want to invest on the Sunshine Coast. But you got to remember the goalposts have moved a little bit, but we still see a lot of opportunity for those values to increase and continue to increase. And I know you had that in your you got something coming up, but we've got clients who have done very well on the Sunshine Coast over the last couple of years, and it's just been that perfect storm for them in getting their location right. Another one where we've just in the Hunter Valley. This is a duplex. Duplexes are really hard, particularly in this sort of market, to pull together, and they don't last. Any option that does come up, they literally do get snapped up within literally minutes of coming to market. So again, making sure our clients can jump quickly. There's a $190,000 uplift in just doing this package. And interestingly enough, we just got the latest land release from the developer, where there's around about a $40,000 increase in land values over and above where we saw that immediate growth. So again, a great opportunity there in an area where we see continued demand and continued increase in values over the next couple of years. An area which we're going to talk about a little bit today is Gympie. It's kind of hard. Gympie is one of those areas where for a number of years you go, I don't know, it's one of those, do you, don't you? But it is just everything, just from just purely to the emotion, from a business perspective, it just ticks every box. They'll put an option together there for some clients in that sub 450 price range. We see really strong growth happening over the next 18 months, 2 years plus. It's in a high demand area. It's in Southside, which is just as you come into Gympie from the Sunshine Coast, 45, 50 minutes from the heart of the Sunshine Coast, 30 minutes from Noosa, close to private schools, shops and facilities there. In fact, it's interesting. We've been talking about Gympie for some time now, Terry, you and I. And interesting enough, in Heron Todd White's month in review report, they talk about it. Is expected to have another good 12 months of affordability drives demand within the region, with both local buyers moving the shift north. But we're also seeing not just local buyers, but we're seeing people from Brisbane. When I was up there, I actually bumped into an old friend of ours who just relocated from Brisbane because of that affordability factor and just the access now on the highway with all the infrastructure upgrades. So rents are really tight. I'm talking to one of the locals up there. The schools are struggling to get teachers because they can't find accommodation for them. And again, when you get really tight vacancies in your rental, you know that the values are going to also flow from that as well. So I'd like to talk a little bit more about, I know we've just talked about some case studies there, but we're seeing this across Australia. Ballarat, we've been talking about Ballarat 12 months ago, 18 months ago when we were talking, and even just this morning we just saw the latest release of pricing on one of the land estates where we put some of our clients in, and we've just finished those homes probably 6 months ago. Those land prices have gone up $100,000 for the same size blocks, and not in as a desirable location. So it's a great win for our clients, where they now have that equity to be able to then either duplicate and go again somewhere else, or enjoy that good strong rental return. But Terry, I'm going to stop sharing my slides so we can just go into that conversation.
Yeah.
But, how do we go there? But just be very interested in maybe just having a chat about some of these areas in Australia, and quite happy to field any questions from those who are watching, and I put in some conversations. I have had a couple of emails from some of our clients asking to have a chat about a couple of different locations like Victoria, and just get your take on regional Victoria, Terry, in particular Shepparton, Geelong. Some areas in Geelong that we like, just in between Geelong and Werribee. Lara is a little town as you come into Geelong. Ballarat still is an area where we see opportunity, and Bendigo.
Yeah, I think obviously the huge trend in Australia is this movement to the regions. It's been underway for a number of years. It's Sydney's been losing population to people moving to other parts of Australia from Sydney for 10 years. Melbourne has been also losing population to people moving out of Melbourne to regional Victoria in particular for the last 3 or 4 years. And so this trend has been underway for that long. It picked up pace last year. The lockdown periods certainly gave more and more people an appreciation of the possibility of working remotely, and that's added to the impetus. I think regional Victoria is really the leader of this market. It's where it first became most evident in terms of uplift in locations such as Geelong and Ballarat originally. Buyers out of Melbourne buying in those places or moving to those places, or Melbourne investors buying in locations like Geelong and Ballarat, and it's expanded further to Bendigo, to the towns of the Latrobe Valley. It was initially locations within 1 to 2 hours of Melbourne, but it spread much further than that. We're now seeing considerable uplift in places like Warrnambool, Albury Wodonga at the New South Wales border, way out of Jura. So it's really spread right across the state in Victoria. And you mentioned Shepparton as an example of a regional centre that ticks a lot of boxes. We're always looking for locations that have solid diversified growing economies, not economies just based on agriculture or just based on tourism,
Yes.
but with diversity. I think it's really important. And Shepparton is certainly a place that has good diversity in its economy, and it's getting considerable demand from investors and also people moving from Melbourne to access that different lifestyle at a more affordable price. So,
I was just announced that in the big budget, a significant upgrade in fast rail service to Shepparton. With the Goulburn Hospital getting a significant, massive expansion, as well as the new art museum, the Maud Street Mall redevelopment, the 1.3 billion Shepparton bypass project.
Yeah.
But obviously that looming undersupply of land, and land is obviously a big issue. We just see great affordability in Shepparton, and the yields and the rents are still very strong with over 5% plus yields, which is very unique in Victoria, because Victoria does tend to have a lower yield focus a lot of the time, but we just see really, really good opportunity there for our clients. Look, there's still opportunity in Ballarat. We kind of joke about Ballarat being another hotspot and going through a second wave, and we're not referring to COVID. We're referring to what's happening in the property market. And
well, it did have a second wave. I mean, we're always interested in the sales activity numbers, the volumes of sales. We look at that quarter by quarter for everywhere in Australia, and it appeared that Ballarat and Geelong, after 2 or 3 very strong years, were starting to plateau off a little bit. And then with the impact of COVID last year, it did have a second wave, and it's come back very strongly. So it's getting a second surge of demand out of Melbourne, but also from around Australia. Ballarat certainly gained a reputation as being a very strong regional city worthy of investment. And it's noticeable to us with the research that we do that pretty much every suburb of Ballarat in the last 12 months has had double-digit growth in their median house prices. And
And do you see that slowing down in Ballarat?
Look at it. I thought it had slowed down, but then it had that second wave over the last 12 months. So it's still got some way to go. There's still growth in Ballarat, and always we take a long-term view. We take 2 views: what's happening in the short term, but also, and more importantly, the long term. I think Ballarat's got such a big future. I would say similar things about Bendigo. 2 cities with perhaps similar credentials, diversified economies, growing populations, great connections to the capital city, Melbourne, infrastructure spend. You touched on the infrastructure that's happening around Shepparton. We always look for that in any location. We're willing to recommend. The infrastructure spend is very important. It's a game changer in many cases. So Ballarat and also Bendigo have that in spades. So we think long term, a good prospect.
And Geelong too, in life. So I remember Geelong was seen as a place to stay right away from, particularly with the Ford factory closing down. But in fact, it's actually become a place for all those people out of Melbourne, just seeking that lifestyle as well. But I think I just want to go on a point that you just mentioned, which I think is very important when you are looking at investing, is you're going to have that short term and that long term. It's not that speculation. I think anyone who's looking to invest, it's not just about trying to make money now. Let's go back to that comment I made before. It's time in the market and buying in an area where you're going to see that long-term sustainable growth, where there's long-term sustainable jobs and infrastructure, but also too where it's great that it's timing the market is also really important, and obviously there's some great opportunities there as well.
And could I touch it on a point you just made? You referenced Geelong, and there was negativity around the closure of the car factory. That's really media stuff, and that's one of the things I think is a very important point to make to people. You mentioned that people going onto realestate.com and looking for properties that for sale, and they think it's research. That's not research. It's doing actual research about locations, about the economy, about the fundamentals.
Yeah.
A lot of people think that scanning newspaper headlines is research as well, but it's not. In fact, it's the antithesis of good research, because quite often the information is extremely negative and quite misleading. And the Geelong case study is a very good case in point, because there was so much negativity. It was like the end of Geelong because the car plant was closing down, but they overlooked all the positive things which are happening. And we did an analysis at one point where we concluded that the jobs being created by new things, positive things happening in Geelong, outnumber the jobs being lost by the closure of the car plant by a factor of 12 to 1. And so Geelong, far from having a downturn, it's actually had an economic boom and continues to. And its real estate market has responded over the last, say, 3 years with very, very good growth as a result of that. So very important to tune out all that media static when you're doing research, and to look at what's really going on. I quite often say to people, the first rule of success in property investment: stop reading newspapers, because you're just going to be misled.
That's probably a mistake I made in my slide. I probably should have included stay away from media, because the media is always doom. It's either doom, gloom, or boom. They're the three. It's either doom and gloom or boom, and it's interesting. It's all you see.
It's always a crisis, Danny. When going back a couple of years, when prices were tending to fall, particularly in Sydney and Melbourne, that was a crisis because the values were dropping. And now we've got the opposite happening, where values are rising. But that's a crisis too, according to media. And every day now there's calls in media that, government has to take action to stop this crisis, which is caused apparently by prices rising. APRA must take action. The Reserve Bank should put up interest rates to stop it. I don't see a crisis at all. There are so many positives in a rising property market, but media will always find a negative to highlight. It's all about clickbait, and I think to be successful, investors just need to tune out all that white noise and look at what's important.
And it's interesting, if you look at the journalists that are writing a lot of these articles, and then do any due diligence on what's their actual experience in the property market, and they're journalists, not necessarily investors themselves, and haven't necessarily done all that due diligence. And it's all about, you're right, clickbait. And it's interesting, all the headlines that I'm seeing now are headlines I saw back in the early 2000s, and just like the advice some accountants are giving, or different people are giving that don't understand property. But it's interesting, we're talking about the Ford factory in Geelong closing down. If we shift to South Australia, where you obviously had car manufacturing was also a big part of a big industry in Adelaide. But Adelaide's another area where we see real opportunity for investment, particularly affordable investing. It's very much a city, and we've been again banging on this about this for a little while, with that affordability. It's affordability, but it's one of those cities that is under the radar. It doesn't get a lot of media attention outside of Adelaide. And areas like Playford in the north of Adelaide to the east of Adelaide, just outside of Adelaide, Mount Barker is an area that we see it's only 35, 40 minutes into town, into the heart of the city. It has that nice regional feel about it and the lifestyle feel about it. But Adelaide is very much a north-south town, but great affordability, in that Playford area, sub 400 properties there, and that Mount Barker around that late fours, $500,000, decent houses with really good, strong rental returns. Your comments, Terry?
Yeah, I think Adelaide's the most underrated city in Australia in terms of property investment. When people really understand what's going on in Adelaide, what underpins it, there's going to be a bit of a stampede towards it, because it offers great level of affordability, great value for money. With reference again to the closure of the car plant in Adelaide, I think what hasn't been understood is events like that are actually part of a transition from the old economy to the new economy. That's certainly, Geelong used to be one of those, what you call the old economy. It's about manufacturing and smokestack industries, and it's transitioned very successfully to a modern economy where the biggest employers are education and health services and other factors. Adelaide is also very successfully transitioning from the old Adelaide economy, which was about car making, and the Mitsubishi car plant closed down some years ago, and more recently the Holden one, but that has really not caused even a blip on the radar screen of its economic performance, because it's part of that transition. And Adelaide's claimed for itself very strongly the space of being the high-tech innovation capital of Australia. It's the Silicon Valley of Australia, and lots of major businesses, both Australian and international businesses, have set up their national headquarters in Adelaide for that very reason. It's the national leader for alternative energy as well, which is very big industry in Australia now. And it's also where the naval contracts are, $90 billion worth of contracts to build frigates and submarines and other vessels for the Navy, all happening in Adelaide. So the Australian Space Agency has been set up its headquarters in Adelaide. There's a lot happening there, and it's underpinning improved economic performance and rising demand for real estate in various forms. So I endorse what you're saying about it. I think it's worthy of much greater attention from property investors.
And look, just comes down to when we're talking to an investor, what are they trying to achieve, looking at their affordability, their budget, and then being able to source that right option. And again, very quickly, WA, just in Perth, is another one of those cities that is just, everywhere in Australia is going through this uplift, but we do see real opportunity in Perth as well. Around Mandurah, sub 400 options there with really strong rentals, less than 1%. Again, very quickly moving to, I know there's some questions about Southeast Queensland we'll talk about in a minute, but New South Wales, we've just had great success. Just recently sourced an option, as I said, for a client in Ballina, where just in the purchase of that property, our client will see around about 150 plus just increase in value when that land registers and go through the build process. And that's going from purchase price to independent valuation. So a real win for our client. Getting expensive though, it's getting up there in price point. It's the new people out of Byron Bay are leaving Byron Bay and they're going to neighbouring townships like Ballina, where they've got that affordability, and obviously you've got the jobs, the airport, and again the infrastructure that we talk about. Forster, Tuncurry, I'd be interested in your thoughts on Forster, the Forster area, Terry. Then Bucca Heads is another one. Southwest Rocks, areas where we've been sourcing some options for clients. Again, all these areas where we're seeing good sustainable growth, not just now, but in the future.
I think people should always look at what underpins the property market there. It's always about the local economy. I think regional New South Wales was full of good regional areas that are worthy of people's attention as investors, right from the Tweed region up in the north, right down to Albury-Wodonga in the south, and inland to Wagga Wagga, Dubbo, Goulburn, Nowra, Tamworth. Orange is one we like a lot. These places all have economies that are strong, growing and diversified. There's infrastructure spend happening in some of those places that many people watching and listening may not be aware of. And so there's really good prospects there, because the buying is just so much more affordable than the bigger cities, and the rental yields are so much higher, and the prospects for growth are good. And it's a combination of infrastructure spend, what's happening in the local economy, but also the exodus to affordable lifestyle trend that's drawing more and more people out of the bigger cities to some of these regional areas for that affordable lifestyle.
Actually, just driving into the office this morning, hearing Michael McCormack talking about the push of people to leave the cities and move out into regional towns, and he was actually talking about that on AM this morning.
So, of course, he's the member for Wagga Wagga, as well as being the Deputy Prime Minister, and so he'd be acutely aware of it. And
encouraging people to move out of the capital cities, but
well, it's already happening. I think the population of Australia is way ahead of. I noticed there's a bit of a drive that was coming up in the research this morning. There's a a bit of a government campaign to encourage people to move to regions. Well, people have already been voting with their feet for a number of years, and I think it's got longevity, because I think many people were in the big cities because they thought they had to be for their jobs or their careers, and increasingly people are realising they don't have to be in the big, congested, expensive cities. So I wonder if you sell up there and move to a good regional area, you're going to be buying perhaps a home of comparable standard, but at less than half the price perhaps, and have money left over and just be able to have a completely different lifestyle while working remotely, or perhaps having a career in the local regional city. Many of these cities have substantial employment opportunities in their own right.
Yeah. I'd like to talk about Queensland, Southeast Queensland, regional market, as well as Brisbane. I know we've got a couple of questions that have come in, and probably just want to talk firstly about Brisbane if we can, because I really do like Brisbane. I think Brisbane is a market that has been almost on the starting block for a number of years, and it's just been waiting to go. There's just been these little things that have occurred that have just stopped it from moving forward, and I know there's a lot of conversation about the Olympics and the impact the Olympics are going to have. And again, we talked about that a couple of weeks back when we caught up, but again, also to last week. But your thoughts on the Olympics and the impact that's going to have on property prices, but also to what is happening in Brisbane right now, because Brisbane is really right in that spot where it has just been on that starting block, and it's now we're starting. I mean, we saw this probably late last year, but it's really starting to take off in the media, and the data is only starting to come and flow through. But that Moreton Bay region, there's just, we've talked about it numerous times previously. We just see great areas, particularly around Redcliffe. Places like Newport.
Brisbane's already left the starting blocks. It's just been on the starting blocks for a while, and people have been wondering, why isn't Brisbane taken off? Well, it has. It really has. One of the things that we do as a forward indicator is we look at the sales volumes quarter by quarter, every town suburb in Australia, every 3 months. And the uplift in Brisbane, 6 months ago, and then again 3 months ago, and the last 2 quarters has been extraordinary, and also in regional Queensland. So Brisbane, the sales volume figures are at levels that I haven't seen before, and they have just increased exponentially. And it's partly because of the exodus to affordable lifestyle. Brisbane is getting population drift out of Sydney and other places, but it's also the infrastructure spend. That's what Brisbane has been lacking. It's such a huge catalyst, and Brisbane has been missing that, but it's now starting to happen with Cross River Rail and Howard Smith Wharves and a whole lot of other major infrastructure projects happening in and around Brisbane. There's more to come, and those are all reasons why Brisbane has started to really take off, and its time has finally come. Regional Queensland, look, 3 months ago.
We're not talking mining towns. We're not talking mining towns. I want to be very clear.
God, no. We never recommend one-horse economies like mining towns or places that are just tourism and nothing else, because they're very volatile and vulnerable. No, we're talking about substantial, well-rounded, diverse regional economies like the Sunshine Coast, like Toowoomba, Bundaberg, Townsville, many other places. The uplift in sales activity 6 months ago when we did the exercise on sales volumes, it was a record number of growth markets. And then we've just done it again 3 months later, and the number of growth markets, which was at record levels, has doubled again. So we're at unprecedented numbers in terms of uplift in those markets. Look, Danny, we've got.
Did you use the word unprecedented?
I did, because I've not seen that kind of movement in sales activity, and it's on the basis that where you've got a big uplift in sales numbers, prices are going to rise inevitably, because that demand, that's uplift in demand, is going to put upward pressure on prices. So I haven't seen numbers change so dramatically in all the years I've been doing these quarterly surveys. We've got quite a few questions. Let's start looking at some of those.
Sure.
Danny, for example, Joey's asking about what we think about the Hervey Bay region. Does that factor on your radar screen at all?
100%. We're actually in the process of sourcing some options at the moment in the Hervey Bay. It's an area that, actually, interesting enough, Jetstar are now going to start doing direct flights from Sydney. There's it's been voted the second best region in Queensland for travel. There's a massive amount of infrastructure with the wind projects, with the just the new CBD redevelopment, the Bruce Highway upgrade, you got reflections on the bay, you got the new big Bunnings coming into Hervey Bay, but it's just an area that we just see. Used to be the town of newlyweds and nearly deads. No disrespect to anyone in Hervey Bay now, but we do see it as an area where there's some real opportunity, both in the short term and also long term, as people are looking for that lifestyle. It's under 3 hours from Brisbane, but it's got that Fraser Coast lifestyle for those who are wanting to work from home and just have a little bit more space, but having the infrastructure that's there. And Joey, I think Hervey Bay is a great place to be looking at.
It's a natural recipient of that exodus to affordable lifestyle, because it's I've heard it referred to as sea change for battlers. I mean, it's really is very affordable, and you've got this wonderful coastal lifestyle with Fraser Island just off the coast. Great, they get the whales, great place for fishing and all of that. Dan's asking questions about Brisbane and South East Queensland. He references the Olympics, and you also asked me a question of that I haven't really answered. Look, there'll be a lot of hype about, there's going to be a post-Olympics boom in Brisbane. I actually think the boom is for the Olympics. It was the same on the Gold Coast with the Commonwealth Games. They talked about after the Games, Gold Coast would have a boom. They didn't. They had a boom before the Games, because it's the construction activity, the infrastructure development, the building of, it's not just the infrastructure for the Games, it's all the businesses that expect to benefit from the Games that are upgrading their hotels and expanding, etc. So there's going to be a construction boom before the Olympics. There's going to be an infrastructure boom to add to what Brisbane already has, and that's where the impact on real estate is going to come from. It's going to come from the infrastructure spend leading up to it.
That's going to give us sustainability in that growth, isn't it, Terry? That constant sustainability, and we're not going to see that. And he asked about areas whereabouts in Brisbane, but it's interesting, and I know that it will also answer the question from Josie. Matthew also asked a question about Ripley and Springfield. And look, a couple of weeks ago, about a month ago, I spent 2 days just driving around all of Brisbane and just really looking at all the suburbs and the estates. And look, there's some really, really good estates. There's some probably areas that I would just be very wary of. Look, Ripley, I think, is very interesting. I went out to the new Providence estate there, which Stockton are doing. The high school that they built there is just incredible, absolutely massive, and really good, really well, good amenities there with the shops. Ripley's 10 minutes into Springfield, and Springfield you are 25 minutes into the heart of the CBD. And that affordability there and what's happening there, when you look at the big picture of what's going on, I think there's significant opportunity in Ripley from an affordability perspective. And again, there are some estates in Ripley that are much better than others, so just need to be very careful with where you go.
Again, it's about infrastructure. I mean, Springfield is worthy of consideration because it offers so much in terms of infrastructure. Yeah. There's a university campus there. There's a major shopping centre precinct. There's a major commercial precinct. There's a private hospital. They now have you can jump on a train and go into the centre of Brisbane directly from Springfield, which is quite a recent addition to the infrastructure mix. It's been an amazing achievement. Still a work in progress, a master plan community over the last 20 years, but still going. And it's part of Ipswich City, which is very underrated, I think, as a place where there's a lot of jobs being created. There's a lot of infrastructure happening, very affordable. And just going back to the question from Dan, he asks about the Moreton Bay region in the north also
Yeah.
got good credentials. And I would also refer to Logan City in the south, which is starting to come back from a slump. Very affordable, nicely located between Brisbane City and the Gold Coast. Big infrastructure spend happening there as well, including the duplicate M1. The M1, which connects Brisbane to the Gold Coast, is very congested as a motorway. So they're building a second M1, which is the Coomera connector. And that's going to come up through Logan City. And so there's benefits there, amongst other things. So yeah, a lot of good prospects to consider in the greater Brisbane area, including that Springfield, Ripley region in the southwest that Jose referred to. Kim was asking about Perth. You touched very briefly on it, Danny. I think Perth is one of those places which has been in downturn for half a dozen years, but again, like Brisbane, it's finally coming into its day in the sun, and it's going to be more than a day. It's going to be at least a couple of years. Perth's coming back very strongly, and a pretty good time to consider buying there. What do you think?
Yeah, I do too, and I think there's a significant rental crisis that's occurring in Perth as well, and we always know that when there's really high demand for rents, obviously values will always follow, but Perth has been quite resilient through COVID, and but also too, it's just been, again, when you look at the cycles, and so a lot of people talk about Australia's one property market, and although we're seeing a significant Australia-wide growth, there are markets within markets, and even in those sub-markets, there are even markets within that. And there are areas like she talked about north of Perth, south of Perth, where we just see really good opportunity. Again, ensuring that you're working in an area where there is good demand, that if you are the house that you're doing or the house you're buying or building meets the demands and the needs, is right for the demographic of that area, and that are moving into that area, we'll always see good rental return for you. But I think Perth has a lot of uplift potential, and it's quite affordable at the moment too. Yeah.
Kim's question asked in part, they have a rental crisis, but for how long and why? Well, they haven't been building as much as they normally would in Perth, and investors have been out of the market. The creation of stock for rental is basically a function of investor activity, and they've been quiet for several years across Australia, but particularly in Perth. So gradually, the vacancy rate has fallen now, so closer to 0 than to 1%. So that's a very, very tight rental market, and it's not something you can turn around in a couple of weeks or a few months. It's going to take time to build up the rental stock. So I think it's going to be a good place to be a landlord for a number of years. There's also part of that question that refers to volatility. I think it's true that Perth's market is perhaps a little bit more volatile than some of the other capital cities because its economy is so interlinked with the resources sector, which is inherently volatile. So Perth does tend to have some very strong uplift from time to time, but it's also prone to downturn. We just need to keep that in mind. But in terms of timing to get into the Perth market, I think now is a pretty good time.
Terry, we've found, I know there's a couple of questions about Sunshine Coast. Look, we love the Sunshine Coast. It's where we've been investing with our clients personally and also with our clients. But it's getting harder and harder because obviously prices, there's just availability of land is very difficult. I know Renee asked about house and land packages. Are they good for investing? Absolutely, they are. But and on the Sunshine Coast, again, it's just been able to, again, make sure you've got the right builder, but also been in the right areas. But Gympie, as we talked about, and I know we talked briefly about Gympie, we've just seen some great success for our clients there, and just in the process of sourcing some more options there. Do you want to talk a little bit about Gympie for a bit? I know because we've talked about offline over the last number of months, but why do you like Gympie, Terry?
Well, I like it because I know it really well. I actually did a major report for the Gympie Chamber of Commerce, and I've got a really in-depth look at it. Firstly, its connections to the Sunshine Coast, which is one of the most dynamic growth economies in Australia, and those connections have improved with $1 billion worth of upgrades to the motorway links between the two places. It's a lot more affordable than the Sunshine Coast, so they get buyers out of the Sunshine Coast. People can buy there for half the price and commute to the Sunshine Coast if that's where they work. But also there's substantial jobs in Gympie itself, and there's more to come. There's some major employers there already. It benefits from being on the motorway and the train line that links Brisbane through Gympie, heading north to other parts of Queensland. There's some big alternative energy projects in the mix as well, so infrastructure spend is going to have some uplift. And it's not just the town of Gympie. Gympie City includes some wonderful sort of hill change acreage areas, beautiful country, and also some sea change towns like Tinkan Bay. So there's quite a lot on offer in Gympie, different types of lifestyle, all very affordable, particularly compared to the Sunshine Coast down the road. So it's got a lot to offer.
I mean, certainly still love the Sunshine Coast. Again, it's just anyone, and look, even with Gympie, just getting the right sort of blocks, the right sort of area. We're still having to get our clients buy ready. So as soon as the opportunity comes up, we can jump on it as well.
Yeah.
You mentioned Bundaberg too. Look, we've been looking at Bundaberg for a little while, and I guess being the northernmost port, not in the marine zone, with the upgrade to the hospital and everything else that's going on there in Bundaberg, does also, there's great affordability. It in itself looks after itself. Your comments on
I think Bundaberg's one of those places that's flying a bit under the radar screen. Definitely worth considering. The typical house is still in the 200,000s, but a very substantial city with big employers, growing. State government spending $1.5 billion on a new hospital. The export port is expanding. Great agricultural area, beautiful country for growing things. I mean, I've never seen soil like it anywhere in Australia. It's just wonderful for market gardens and sugar cane, all sorts of things. I'd like to just refer to the question that's there from Nagaraju. I think it's a very important question. He says, the market's really hot. As an investor, you think it's a good idea to wait for a year or so the market can cool down? I've got some strong views in answer to that, but what do you think, Danny?
Wait, no. It is a hot market. Again, I think you obviously with lots of auctions going on, there's that FOMO and there's that panic buying. I think a true investor doesn't invest with emotion. And at auctions, there is a lot of emotion. You do your research, you build your team, identify where you want to go, and then you pull that right option together. But I know that's a general, it's not talking about specific areas. We're very bullish of where the market's going to be, not just now, not just 12 months from now, but 2 to 3 years from now. And in some of those areas like Brisbane, there are people who can say, I'm going to wait. Anyone who's going to wait, they're going to wait for another 12 months or 18 months before getting into the market, will be paying a premium on top of what they are paying today. Yeah. It's going to be a challenge. I don't see the market going backward at a rate of knots at all in these areas that we've discussed in our webinar today.
I think if somebody waits 12 months for it to cool down, they're going to be paying conceivably 10 to 20% more for the same property. We're already seeing that kind of uplift already happening, and I don't think it's going to slow down anytime soon. And I think it's significant to look at the projections of some of the big players out there. Stockland, for example, the biggest residential developer in the country, put out a report this week saying that they expect their demand for their product to be strong well into next year. The major banks are all forecasting considerable price growth this year and next year. There are very few of the credible forecasts that are expected to slow down anytime soon. So if you wait for it to stop being a boom, you could be waiting 1 to 2 years and you'll be paying just so much more, and it makes no sense. you've got to find a way to operate in the current climate sensibly. And I think the key to that is having a good team around you. Talk to people like Danny Buxton, who's our guest presenter today. People who are genuine experts in the market and can give you the sort of advice and assistance to help you to be in the market now as buyers, so that rather than waiting a year or 2 years, you're actually getting the benefit of the growth of those 1 to 2 years, which you will miss out on if you wait.
And for over 15 years, we've been giving people that advice, working with them to identify those areas that will grow and that will meet their goals. And again, going back to what we discussed before, understanding what is it that you're trying to achieve through your investment journey. But look, there are some fantastic areas throughout Australia that are worthy of real investigation. Terry, obviously, we're just delighted to be able to obviously work with you and also with your clients. And we've had great success over the last number of years working with hotspotting clients in pulling options together, which is allowing them to access that growth and getting good, strong rental yield as well at the same time. And again, areas like Brisbane, I think, are good long-term. Southeast Queensland, great. Even Toowoomba. We haven't really talked about Toowoomba. I know there was a conversation there, but there's a fantastic story there, and both in regional New South Wales, Victoria, Adelaide, WA, all those areas where we're actively working with our clients to achieve success. But just wary of the time. Terry, I don't know if there's any more questions.
Yeah, we might just deal with a couple more questions and then we'll wrap it up because we're just over the air. Pahu is asking about Darwin. Darwin's been off the radar screen for a while. Its market has been in the doldrums, but it's come back very strongly. And it's now starting to lead the nation in terms of price growth. So is that a market that you've looked at all, Danny?
Yeah, we've looked at Darwin. I think for us, though, is it's come off a very low base. It had really, it went through going back about 10 years ago, had quite a good surge. And then we saw values actually diminish in a lot of those areas because it went through, a little bit like some of the mining towns, it went through quite a significant growth phase and then came right back. I mean, there were places in Darwin where you were paying 800,000+ plus and Palmy and places like that, and then they drop right back. So there is an opportunity for those in that area. It is an area that the cost of building and construction is very high because of the cyclone activity. And we probably believe for us, it's not an area that we are focusing on, but it does tick a box in some of those who have the relationships there in that market.
Yeah. Paul was asking quite a big question. Where are the biggest infrastructure projects occurring in the next 4 to 5 years? It's probably impossible to answer, and we'll probably need another whole 1 hour a webinar to really deal with that, Paul. But we do think they're very influential. In fact, we're just publishing a report this week, which is called Australia's Infrastructure-Led Property Boom, the National Top 10, because we think one of the reasons why we think this national property boom has longevity is because there's so much being poured into infrastructure. It's clearly the intention of both federal and state governments that we're going to have an infrastructure-led economic recovery, and that's very influential for residential property. Probably the biggest project currently happening is the Inland Rail Link, $13 billion project, well under construction, linking Brisbane to Melbourne via inland New South Wales. We've seen markets like Parkes become very getting a lot of attention from investors, and prices have risen strongly there. But Toowoomba in Queensland, I think, is one of the pivot points, and that's one of the reasons why we think Toowoomba is worthy of attention. So those are certainly the sorts of projects to follow, Paul. I often say if you want a simple philosophy to succeed in property investment, follow the infrastructure trail, and you could certainly follow the route of the Inland Rail Link and consider what impact that's going to have on places like, say, Toowoomba and Parkes.
And I think too, Southeast Queensland, with the amount of infrastructure spend that if the Olympics is announced to be in Brisbane, the amount of infrastructure that's going to be pushed forward that might have been set for the next 15 to 20 years is all going to be pushed into the next 10 years. And so I think that's, again, going to be a big win for a lot of the people in Brisbane, which has been lacking to some extent. But that's where even like areas like Redcliffe and Scarborough are doing really well, because you've got that airport, duplication of the airport, the tunnels, and then obviously with the new train line coming into Kippering, is where we're seeing, and obviously you've got great schools, you've got the hospital, employment hubs, and again, only 30 to 40 minutes to the CBD of Brisbane.
Yeah,
and
that speaks directly to the question by Nicolette, was asking about Redcliffe and Scarborough. So you've answered the question before I put it to you, but the Redcliffe Peninsula has received quite a lot of uplift from the extension of train links to it, but also it's been kind of gentrified. It used to be considered a bit down market, the Redcliffe Peninsula, but it's changed enormously over the last 10 years. It's got a real lifestyle to it now that wasn't there before, and it's close to the facilities of, say, the North Lakes Master Plan Community, the new university campus are not far from there. So
that university campus too is, that's again banging off that around that North Lakes, around that, even some of those older places like Strathpine, Lawnton, used to be, again, we're just seeing that urban renewal that's going on, and just again, you're still Brisbane, and you still got that proximity to the motorway, the highway, and train.
I think we're getting to the point where we probably have to wrap up. I'll just refer to a question from Ranjit asking about Sydney. We haven't talked much about Sydney, but I would say I would refer again to that philosophy of following the infrastructure trail. It's been particularly influential for Sydney markets in recent years. Western Sydney is one of the great growth economies in Australia, and the infrastructure spend out there with the new airport, with the big spend in the CBD of Mount Druitt, for example, the transport links that will be upgraded in connection with the new airport, and a whole lot more. I would suggest look out to that Western Sydney economy for future growth in Sydney is one of the tips that I would give about Sydney looking forward.
Absolutely.
So, Danny, we've gone 10 minutes over the hour, so we might wrap it up. Could you just share your screen again? And I think you've got a special offer, but also your contact details, because we encourage people who have requirements or further questions to follow up and make contact with you.
Yeah, sure. So we have a special offer there that you can see. So for any client that comes and works with us and is able to go through that property process, we're actually going to organise through Terry and through the Hotspotting team a 12-month subscription for you, the Premium Gold membership subscription, which is valued at around $2,000. And that's our gift to you, because we do believe that one of the big parts of when you invest is all about your research. It's such an important part, and it's about building your team, and having the Hotspotting as part of your team, we believe is an integral part of that process. So for those who we work with, that's an offer that we'd like to present to all of our viewers. Obviously, our contact details, if you are thinking about investing, you have further questions following on from today's conversation, our job is to help you make money through property. It's by doing it smartly, wisely. It's not just buying anything that's there. It's about following the research, following the numbers. Our clients are successful, and our client success is our success in what we do. And for 15 years, we've been working with everyday Australians through their investment journey throughout Australia. And look, we're very passionate about what we do, and we're very relational, because it's all about you, the client, in achieving your goals. And it gives us great joy in seeing the results from our clients. So thank you, Terry, for today and the opportunity to share with your clients as well and your database. But look, we're here, and we're only a phone call away, or just drop us an email at invest@000property.com.au or jump on our website 000property.com.au and just fill in a form there.
And I would urge people watching and listening to actually make contact. Because one of the answers to one of the themes for today is how do you operate in a raging property market? I think a key answer to that is to have a very good team of experts around you, and I urge you to make contact with Danny and 000 Property, so they'll be able to help you find safe, sensible, and productive ways to operate in very strong property markets in different parts of Australia right now. So thanks everybody for tuning in. I hope you found it useful and informative. Apologies to those if we didn't get to answer all of your questions, but please follow up with Danny. You're also welcome to make contact with me if you have further questions that weren't answered in today's event. So Danny, thank you. Let's do it again soon.
Thank you, Terry.
It's always a lot of fun,
No worries.
particularly in exciting real estate times like we're in at the moment. Okay, everyone.
No worries.
Terry Ryder from Hotspotting signing off. Bye for now.
Thank you.